Good afternoon, Essentials Room, or good morning, Essentials Room. Good morning, YouTube Live. What's this about? Well, it's just about markets rallying to it from an oversold condition, and we nailed Meta. Unfortunately, Meta, we were too right. So, what are we talking about in here? Well, number one, I hope you watch me on Stock Twits, which is Stock Twits, Christopher Brecher, because I'll tell you right now, and I'll show you what I posted yesterday. Like I said, one of my pet peeves is being too right. We were too right. So let me show you what we're talking about. So go and check this out. Pretty cool. So this is yesterday that I posted this. I also posted it in our video on chart patterns mastery, but there you go. Finally getting bullish in Meta. Guess I was too right. So check that out. Now it's at resistance, but just keep in mind, the faster they go down, the more they have that snapback resistance. So just keep that in mind in there, what you're seeing in there. Price, I mean, this is as simple a chart. What are you using? A 50 and a 200. And on a short term, an ATR trailing stop and a trend line. That's it. I mean, that's it. So I'm just telling you that and I've harped about this in multiple rooms about, you need to take away 20 swing thoughts. Just keep that in mind. You just need to take away 20 swing thoughts like in golf and go to the most basic thing, and that's charts. That's without anything on. Does everybody see that? What's the path of least resistance? The path of least resistance is to the gap. Look at that. So now this stock has a habit of overshooting the gap and then coming back down to earth. But just keep that in mind. It's all about path of least support or least resistance. So I know you're used to me, and I've mentioned about an art of short selling class, but just keep in mind that we show longs too. So just keep that in mind in there. So just want to let you know. So where do we go now in the markets? Got to tell you right now, we're getting overbought. Now everybody's getting bullish, but now we're getting overbought in a downtrend. So just keep that in mind in here. Overbought in a downtrend means not to chase it. So if you don't want to buy, I understand that. I mean, if you don't want to short because you're not comfortable, but you're getting overbought in a downtrend without any moving averages. I hope everybody sees the trend line break or the support price resistance here. Prior bottoms become resistance. Just keep that in mind. And it stopped there on a dime. So just, keep that in mind. That's number one. Number two in here, like I said, I'm showing the MACD. I'm showing price. I haven't even overlaid any moving averages. Daily, I'll use a 200 and I'll use a 50. So, but you take that off, you see the overbought here. So, I mean, just keep that in mind. Doesn't mean you have to stop there, but it means not to chase there. Just keep that in mind. It means not to chase at those areas. So in chart patterns mastery, I was going to show you a trade, but it was too thin. So let me see if I can do it. Give me a second. Well, I was going to show you a trade in the SPX. So remember, we're still in Visa. So don't forget that we're still short Visa, which is just sitting there. But that's what I want you to see. Overbought. I'm just using a 310.16. Anybody can use that. 200 and the 50. Prior bounces become resistance. Then you look for the trigger to short it. Just keep that in mind in there. And so far, that sort of worked. So keep, definitely keep that in mind. So far, so good. So we're still in NVIDIA. Take off everything. Where is resistance? Resistance is right there. Where's support? Support right in here, and that's it. So, and like I said, there is no put bull. And number two, I've been posting these before they've happened. Just keep that in mind, Lawrence. Real easy to see in hindsight when I post it before it happens. This was posted before it happened. That's not hindsight when you post before it happens. On the upside, up here, number two, pit bull low is a fallacy. In an up market, the next day is up in general. But in a downtrend, pit bull low does not work. There is no holy grail. Keep that in mind. That's a fallacy. In an uptrend, sure, the Thursday before expiration goes up. Today is not the pit bull low. It was last Thursday. And how did that work? It worked like crap. So just to let you know, though, I hate hear it in hindsight. These are all posted before they happen. Just keep that in mind. So just keep that in mind. So, and like I said, pit bull low works if there's an uptrend. If it went up last week, it's a coincidence. You're oversold at support. So just keep that in mind. But everything else I showed is before it's happened. So just keep that in mind. Hindsight, well, you got overbought a resistance. How's that worked? Well, saying that I called it before it happened, I think it's pretty good. So just keep that in mind. So I'm really, really dislike hindsight trading. That's why if you go back to stock twits, boy, that sure ain't hindsight to me. Stock's up 20 points. So just keep that in mind. Sure doesn't seem like hindsight to me. So that's pretty cool. So just keep that in mind in there. Finally getting, you had all the time in the world this morning. Apple backloads their buybacks. Done for now. That was before it went back down. So maybe a gap fill, but it's starting to get overbought. Where'd it go? It filled the gap. So just keep that in mind that the things I show are not hindsight. Like I said, I don't like hindsight. Pisses me off about hindsight traders. Hindsight traders do pretty well usually. All right, so what else are we going to do in here? Number one, I still like the idea of a lot of things are getting overbought and they're starting to be near their buyback blackout. So what am I talking about in here? I'm talking about that companies voluntarily don't buy back stock 5 weeks prior to earnings. And the reason for that is because legal reasons. If they were buying back a ton of stock and then they have great earnings, it looks like insider trading. 35 days prior to earning, 35 days prior to their earnings. What are you noticing in Visa? Down, 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 and we'll see. That's why we're betting on it going down. So we're in that. So just keep that in mind. We're betting on it doing nothing. So let me share this with you. I love sharing these images. Here you go. There you go. All right. How about Apple? Well, like I showed yesterday, they backload, which means that usually in the morning, they're going to buy a ton the day before they go into blackout. And guess what? They bought a ton before it went in the blackout. Go and check what Apple did yesterday. Went straight up yesterday, even though the markets were going down. And then when the markets went up, they went straight down. It's amazing how that works. So now I'm not sure if today is the buyback blackout or it's tomorrow, but it's one of those. So just keep that in mind. All right. So what else are we doing? Well, number one, when you have buyback blackouts, so a lot of these companies buy back a ton of stock. So in fact, the Sunday night charts I do for everybody, I had a list of the biggest buybacks. You know, it's the normal ones you're used to, the Googles, the Apples, the Goldman Sachs. Let me see if I can find it for you, just so you get an idea. So every Sunday night, I post a bunch of charts for subscribers. There, Apple, Alphabet, Nvidia, Meta, JP Morgan, Visa. Yeah, Visa. Exxon, Chevron, Microsoft, Bank of America. So that's based on the third quarter, last quarter, in 2024. So yeah, can move a little, but I thought I'd show you that. So pretty cool. So just thought I'd show you that. Now, a lot of people get this wrong. They think that the markets have to go down when there's the preponderance of buyback blackouts. So when are the buyback blackouts? The preponderance. I'm talking about most of the S&P. So usually they start reporting like the JP Morgan April 14th. And Apple is usually like May 2nd. So the easy thing to do in here is to take like April 14th. So let's take this. We're going to take May 2nd. That's approximately Apple. And we're going to take April 14th. So that's when JP Morgan comes out. So you take that 5 weeks in there, right there. That doesn't mean markets have to go down. What it means is if you're overbought in a downtrend, they're more likely to go down. That's all it means to me. They're more likely to go down. So, and I'll show you historical precedents for that. It doesn't mean they have to go down. I just want to make that real clear. So it just means that bad news is more likely to tank it because the companies can't prop it up. So you can go back. Let's go to, well, heck, you can go back to this one. So go back to here, May 2nd, April 14th. What did the market do back then? It tanked. Look at that. And why did it go up? Because they can buy back stock. So keep that in mind. Now, let me show you a prior one because I thought you'd find this interesting. So what I want to show you is this. We're going to go back to 2023. Now, the reason I keep harping on 2023, give me a second. The reason I'm harping on 2023 is the Russell back then pulled down the broad market. So I'm going to just go to 2023. Now, keep in mind, one of the reasons that it's historically strong at this time of year, at the beginning of November, is because companies can start buying back stock. So just keep that in mind. I want to make that really clear. So let me show you what we're talking about in here. So we're going to go and use the rewind function on Thinkorswim. Now, when I'm dual broadcasting, a lot of times this won't work, but I'm going to cross my fingers that it works. So I'll show you what we're talking about. So we're talking about in here that going back, and I've showed this before, and this isn't a holy grail either. Just keep that in mind. It's not a holy grail. Just because it did it back then doesn't mean it's doing it now. I'm showing it because we're looking for the rollover. You don't have one yet in the broad market, but I just want to show you this so you sort of get an idea. So on the right is the ES, and I'm going to show you on a daily chart. So what happened over here? You had the Russell fall under the 200. I want to be sure I have this right for you. There. The Russell decisively under the 200, and the ES is decisively over it. But when on the left, this got on 50, the probability is this was going to approach the 50, which is what it did. Once this decisively got under the 200, then it was more likely that on the right, it was going to approach the 200. Now, you might say, how come this isn't overshooting? Because the ES is the one with the biggest buybacks. But back then, people were worried about growth. And what happened? So in here. So what you see in here is this. So, and by the way, I have certain things I say over and over. So if you don't like that I say keep in mind a lot, I would just go to another site. So I have a certain thing. If it, if I make my clients money, I'm sure I say dad jokes a lot too, but I'm a lot funnier when they're making money. So get over here. ES, what did it do back here? Well, you'll see. It didn't do anything yet. But the Russell's going down enough. So now go into here. And what you're noticing is this went down enough and this approached the 200. This is September 27th. When do the buyback blackouts start in earnest? Really about October, let's say October 6th. Same thing. Take that buyback blackout window. So go into here. You're going to go to, let's say, October 6th. So what are you noticing? The Russell rallied, the ES bounced. So the key in here is not to short in this area. The key in here is to look for the rollover after the oversold rally. So go to October 11th. So as you see, did it overshoot resistance? It sure did. But now it's overbought. So what made the markets go down is the Russell. Keep that in mind. Yeah, I love saying that. But that's the point. You need to have these things in your mind. Swing thoughts. Got to have these things in your mind. This led the ES down. It bounced. The ES bounced. So if this rolls over, because now it's overbought, this rolls over, then this is more likely to stop. It's not guaranteed you're going up, but it's more likely to stop. So fast forward it. Now you're getting in the height of the buyback blackout. So this started selling off and this stopped going up. So now it formed a defined triangle. What's the probability of that triangle breaking up versus down? So let's say right now it's 50-50. Well, it's going to go to 90% probable it's breaking down if this breaks down. So it's all about probability to be the house. Keep that in mind. This broke down. This broke down. It's probability. So the probability of this breaking down went up to 90% when this broke down. Also, when this started breaking down, did you have a chance to short it? Of course you did, but you have to look for a shorter term trigger. So if the daily is rolling over on the Russell, you're looking for that trigger, and there's your trigger. The trend lines, take the trend line breaks. And so that's how we do it. So that's how we do it. And that's how we do it. So now fast forward. So you know the Russell has been bringing us down, but the Russell's going up. So the ES shouldn't go down yet. So it's all about probability. If this starts rolling over, then the probability is that will stop going up. But we're not there yet. Just want to make that clear. You're not there yet. So I know it's like Disney World where you're like, are we there yet? No, you're not there yet. So just that's how I look at it. So we're not there yet. And we will be. We're not yet. So now I'm going to take trading view. We're going to take the Russell on the left, which, like I said, is not turned yet. Where's the breakdown? Forget about the 200. There are too many people that talk about that. It's price support that matters. If you bought because it was at the 200, you're probably not on the site anymore. Probably don't have any money left. Remember, you might be able to average down, but how many have that much capital other than Warren Buffett? So that's what I'm watching. I'm watching the 50. I'm watching the 200. As you see, now a lot are talking about, death cross and all that. We've been short since the trend line cross. But on the way up, yeah, that can act like big old resistance. It can, but it hasn't yet. So in fact, let's go back to this. I want to show you something interesting. I want to show you something interesting in here. We're going to go back, and we're going to go back to the Russell. And what you're going to notice back here, when was the death cross? Right here. Believe it or not, it rallied first a lot. Worry about the turn. Right here. Either. The point is, if you shorted here, you had that as a backstop. Just go to that day, October 12th. Put it on a shorter term chart. Because that's what you're looking for. So go to October 12th. So you know that this rolled over. Now, I just said roll over, and my dog is named Moxie, just rolled over. A obedient dog. There you go. Do you see where the rollover? There's a trend line here, and there's a trend line here. We have gone over this over and over, that you're looking for that trend line rollover when it's overbought. So I'm going to take off all these lines and show you again. So just the trend line rollover. So you have this, October 12th. You have that this is overbought, but you're not sure when it's going to stop going down, going up. And this one. Now go to a shorter term chart. Look at this. Look at the box on the bottom. That's October 2nd. October 2nd, check that out. Trend line break, bear flag. Those are beautiful things. Now, it went back up, but you had the backstop if you're a swing trader. And then you had the next break. And then when you really look at it, it better hold this whole thing. That whole triangle. Respect the break in either direction. And the direction was down. Now, why was it direct? Because you were overbought in a downtrend. If you got in too early in here, you had your backstop, progressive lower highs. You never would have gotten stopped out. But that was the good trade. So that's called a Brecher ledge. After a sell-off, you get a horizontal trend line after a consolidation. Right there. Horizontal. So I know it's hard to short here when it was just here, but you're trying to get the direction correctly. I mean, that's what you're trying to do. So it worked. So there you go. Russell worked. ES followed. How about now? Do you see any reversal? I don't see one yet. Doesn't mean you won't have one later, but you don't have one yet. Do you have a defined trend line? Well, you're starting to. Look at that. You're starting. It's not perfect. But under this, that's 30 points. That's a little ambitious. But under that, then the ES is probably going to stop. How about a 15-minute? Not showing me anything. So I'm just telling you that I will be watching that, but we don't have that rollover yet. That's all. No more, no less. We just don't have the rollover yet. And now another thing you're going to want to watch in here. While this is having its oversold rally, which can go higher, Are there stocks that will just keep going? Well, the first thing is always to look at tells. So, what's one of the tells? One of the tells is this. And now the markets are in a long term downtrend. On a daily chart, I don't even use the ATR trailing stop. If I did, keep in mind it's going to get way overbought at resistance. I'll use an ATR trailing stop on a intraday, not on a daily. So the only way that I would look to buy the Russell, because, in the long run, you're right, the markets have a habit of going up. Well, let's go over it. It's a great question on your part. Where do you buy for a swing trade? After a lot of damage, you usually buy when you can draw a defined trend line. Almost every sell-off I see has a defined trend line. And Casey, I'm happy to go over it. It's a great question on your part. I wouldn't buy when you have that much damage. Now, I could be wrong. Trump comes out, takes off the tariffs, and we go up to here. But in the long run, after a big sell-off, you see it. You get a lot of fake outs. Usually the first rally over the ATR trailing stop, if you want to use a daily or an hourly, the first rally usually creates an overbought condition. So after a protracted downtrend under the ATR trailing stop, I don't trust the first pop over it. But let's go over it because, Casey, it's a great question. Like I said, number one, after a big damage, I like a defined trend line. Ideally, a bull flag after the break of the defined trend line. So that means you're like in inning one of a bounce. So he's just not there. That's what I mean. It's just not there. So in Chart Patterns Mastery, I am not having time getting you back in the meta. But just to let you know, I just mentioned to you, luckily, that a lot of times when this sucker rallies, after an oversold, it fills the gap and overshoots. Fills the gap and overshoots. Fills the gap and overshoots. Do you see any similarity? Fills the gap and overshoots. Fills the gap and overshoots. That's what it's doing now. I would have gotten you back in that butterfly, but I'm on here. But I do have another idea for you. Let's say you have some longs on. I'm not saying you have any longs, but if you do, I'm looking at this Chart Patterns Mastery. I'm looking at a longer term put fly in May. Something like that. Something like that. So just keep in mind that when you're looking at this, sorry if I say, but that's the way it is. If nothing happens for a week, it goes to 8. So I'm watching that carefully and I'll post. No, Meta, we're already in a butterfly. We were in one and we gagged on it. We were too right. Really makes me mad. So I don't like being too right for our subscribers. And I'm still looking to get back in. Meta, what it means is to look for that reversal pattern. Yeah, there it is. But you didn't know if it was going to overshoot even more. That's always the tough part. So now for the first time, it's under an ATR trailing stop. So in there, first time. And I think Trump is talking at the Bitcoin summit. And Chart Patterns Mastery, you were right. Watch the Bitcoin because it's correlating with the Russell. If the Russell goes down, it probably pulled down the NASDAQ and ES from resistance. So that's what I'm watching. It just means if we just talked about it, thank goodness. If the Russell pulled down the broad markets for the last, few weeks, then if the Russell starts selling off, you see what's happening. So Chart Patterns Master, I got a trade for you. I'm going to triple broadcast in there just so you know what I did. And it is breaking the machine. There. So that's in there. Just to let you know, that's in there. I hope you see it. So that's what we're doing. Now, Meta, yeah, trying to go to the strike price. I didn't have time to get you back in that Meta. We bought it at 209, got out at 2. It's now 230. And this is all about the strike price play. So now let's go over some individual stocks. Number one, Meta. Yeah, it filled the gap, but now way overbought. That's what happens. Look at all these times it's filled the gap. Overbought, filled the gap, overbought. Didn't go straight down, but it did go down. So overbought. It did after that. So unfortunately, that Meta, yeah, well, that's the way it goes. So it's going to get sucked to the strike price. Now, we could go over individual stocks. I'm happy to, but just keep in mind that Meta was a better short when it crashed. Unfortunately, I was on because you got to respect the break in either direction. But when so many in the group were going down, the probability is this was going to go down, not up. Just all about probability. Go and put Amazon, all these Mag 7s. There you go. Top. There is a top. KC, if you're trading a 1 minute, you bet on the cross and then the consolidation. For the ES on the upside, on a daily after this much damage, I think you look for this. You look for this right here. You look for that. Or this. But you can see in here that it started turning. But after that much damage, it takes a long time to work off that damage. Right now, doesn't look anything like these. On the other hand, you might say, well, it's different this time. You might be right, but I'm just telling you, that's how I look at it. And I'm hoping that helps you, Casey. So, like I said, it could go up to here. It's just the probability is that it needs to work off a lot of damage. So, I'm actually looking for short ideas up here. And if the Russell goes down enough, I'll get more aggressive on the short side. You see, the Russell stopped at resistance, but it's not the point of no return now. What I mean by that is you need to see it here. And then I think you see the ES down. You just don't have it yet. So that's what I see right now. We don't have the real trade in there yet. So, this could be an inverse head and shoulders. but the probability of this breaking up goes down if the thing that made it go down earlier breaks down, not up. So I would just put those side by side. That's why I have them side by side. So if this Russell breaks, then this is more likely to break down, not up. Just respect the break in either direction. And as you see, if this breaks, that's close to breaking. Like I said, the preponderance of buyback blackouts is coming up. That's also on StockTwits. Here you go. And I showed it earlier. I'm happy to show it again. Let me try to find it. It's all in here, and these are not hindsight, like I said. Let's see. It's in here somewhere. There you go. There's a Stewie pattern for you on March 14th. Look at that. So in answer your question, the daily doesn't look like a buy yet, KC, but the hourly back here did. Do you see that? And if that looks familiar, it looks like Meta right today. There. That you wanted to know. Let me see if I could share that link. There's your buyback blackout area. That's why I think we have the oversold rally. We get overbought, and now you're here where if the technicals say it, you go down, you don't have the preponderance of the companies able to support it. So here, let's see if this works. There. Unfortunately, you're going to have to find it. So in there. So Chart Patterns Master, I hope you saw the trade we did. The theory is this, if this breaks down, and KC, let me show you again on the other hand, the ES back here. The reason I was bullish was the hourly inverse head and shoulders. See it? This is where I posted on StockTwits, not hindsight. Posted it as it was happening. That's your inverse on an hourly. The daily, not even close. So now what we're watching is this. Is this going to break up? I'll take off a lot of this stuff. Is it going to break up? Well, same thing. The probability of this breaking up. Similar charts have similar results. On the left, I'm going to put an hourly of the ES. Remember, the Russell was what took the markets down. So if that Russell fails here, then this is more likely to fail. If this 15-minute breaks to the downside, not the upside, then the probability of that breaking up goes down probably by about 80%. That's just eyeballing it. So take a 2-minute chart. The probability of this breaking on that topping formation goes up dramatically if this breaks. In fact, this is already acting poor. So, Casey, I hope that answered your question. So, and you know, it's sort of funny, not funny, but we were just showing Meta and you're like short Meta. And this is another one of those where I'm not being glib, but it's a better short when it decisively broke. So it's a better short at 607 than 609 because you weren't sure it was going to 615 first. So now what happens? Well, I'll show you. At least this is how I look at it. Chart Patterns Master, because I can't put trades in here. Transports. Now, this is something that irks me that I did. This is an old trader trick. UPS got destroyed on earnings. Destroyed. Federal Express has earning night or tomorrow morning. and it was up 2 points. The old trader trick is if the whole market is choppy, which it is, that this is probably going to try to go back to unchanged because traders will want to flatten before the the earnings. Back here, yeah, I probably should have bought it. We bought Meta instead, and we bought some other stuff. But the probability was it wasn't gonna, that now it could go back to unchanged. It's very thin, though. I always thought Federal Express was more liquid. It's not. So you can drive a truck through the markets. I've been waiting to say that. But I wouldn't be surprised to see that back here to unchanged as traders flattening. And by the way, you're NVIDIA. So we did a butterfly in there, betting on 120, but we didn't like the broad market because it's overbought. So we did that butterfly 115, 119, 123. You're up about 30%. Look what happened to the ES. So KC, how did that work? So if the Russell went down on the right, then the probability is the ES was going to go down on the left. Real time while I'm on. That's why I posted a short idea in the SPX or the XSP up here before it happened. I'm not sure what you mean about the chart, about the XSP statistic. Oh, expiration. Sure. Yeah, absolutely. So if you didn't know, let me see if I can put it up here. Here you go. If you're wondering, this is a non-trade alert. I'm just putting it up here. This is from my buddy Jeff Hirsch, Stock Traders Almanac, which last year at the Money Show, when I bought a book for his book, he put to my favorite short seller. That was pretty cool. Yeah, right at the bottom, but that's besides the point. But the key in here is this. You see all these people on Twitter talking about, oh, the markets go up the day after expiration, or that triple witch is going to be volatile. Well, go and check this out. It's a great question. Thanks for all the good questions, KC. This is the March expiration for all the people on Twitter. I could go through them right now if I felt like it, that say, oh, it's going to be volatile. Look at the average. It's like 0 on triple witching. Next thing, though, is a lot said, oh, you're going to go up the next week. Well, I don't know about you, but it looks like it went up 35% of the time. And that's in a bull market. This isn't from 1950, but you didn't have really the options. So how about option expiration week? Sort of up. So, keep that in mind. Thanks for mentioning that. Yeah, I try to post a lot in there. So the week after expiration, has a habit of going down, not up. You see all the red. And that doesn't mean to blindly short. What it means to me is you don't buy just because people on Twitter say to buy. I would watch Jeff Hirsch. Some of the other people that imitate him, I would follow Jeff Hirsch. I have my own personal opinions, but I would follow him. He's not a promoter, and he's really good, and his dad was really good. But you see, it doesn't do a lot. The point is, the charts are what rules. So whether it looks up or down, we're overbought in a downtrend. The Russell is overbought in a downtrend, but it hasn't turned yet. If this has a decisive rollover on the right, then the probability is this up move is done. The only difference in 2023, this went all the way down to here, and this futzed around for a week. So that's why we did something in May in the SPX or the XSP. That's all we did. And by the way, Chart Patterns Mastery, if you didn't get out of Meta, you're up 10%. So all you had to do was realize that the second that these broke, the probability is this wasn't going to go any higher. Also, if you do historical stuff, unfortunately, I was not able to get to you in time. So you see what's going on. All day, I would concentrate on three things when I'm not on. I would concentrate on Bitcoin, which we were showing as a possible bear flag. Remember, a bear flag, though, you still want to have the break. That's not tight enough. But if you were trying to play it, you got to find that rollover or a reversal candle. There's a reversal that was in the middle of the night. But remember, we just talked about the Russell in 2023. There you go. In Bitcoin on a 15-minute now. I'm not playing Bitcoin. But if this breaks anymore, I think the Russell breaks. They've been correlating beautifully. Sell off in Bitcoin, sell off in Russell. If you go on hourly charts, very similar. So if Bitcoin goes all the way to here, I think you see this break a lot. And if this breaks enough, like the Russell down 10. There. If this gets to here, I think you're going to see the ES go down to here. That's how it looks to me. Yeah, thanks for saying that in there. In fact, that when I post things in StockTwits, you can get the alert sent to you. And you might be like, why the heck do you post there, not in the chat? I do in the chat all the time, but it erases. And like Chart Patterns Mastery, Central Room, Essentials Room, I can't post everywhere. So just go to StockTwits, see it. And I don't know about you, but it seems like a lot of them I posted have been very relevant. So very relevant. And the next, well, I'll show you. And like I said, that's free. So it's a good promotion for our site because I'm not putting trades in there. But there are a number of people that have replied to me and said, I bought Meta because of that trend line break on the upside. So if I can help, great. I'm trying to post them before they happen. So what I'm seeing is if the Russell doesn't hold right here, then the probability is the ES is going to have another leg down. That's how it looks to me. Also, like I said, that pit bull low, hey, it might work in an up market because markets have a tendency to be up there higher than the prior day. In a down market, I haven't seen the pit bull low work. I do watch it, but it just in an uptrend, today should be higher than the day before. I mean, that's what an uptrend is. So I don't look at the pit bull low. It did work last week, but just go on charts. When you go on charts, hey, guess what? This is right on StockTwits, telegraphing right here. And if here you bought because of the pit bull low, well, you were early. So if you want to combine things, sure. But you see the inverse head and shoulders. In fact, on Thursday, if you bought, you probably got hosed because the pit bull low is supposed to be the lows on Thursday. I don't know about you, but I'd much rather buy here or here, because if I buy there, I might be blown out by then. Everybody assumes that you have unlimited money and you can just keep buying on the way down. Not true. So the next thing I want to show you is about initiation. And let me show you what we're talking about. On the way down, if you buy on the way up, I want to go over premium. I trade on the options floor for a long time in Chicago. If you buy on the way up in a downtrend, you're going to hit multiple layers of resistance. Now, you're going to get short squeezes like yesterday, sure. But I want to show you something fascinating. The market has rallied 17 points, the SPY. I want to show you an example of how you lose money being right. Go and look at the 580 calls. 580 calls. This is for March, 8 days out. So on the way up, implied volatility goes down. On the way up, you usually go up slowly because you have a lot of resistance. So here's the, I'll put the SPY on a 4-hour chart. On the right, I'm going to put those calls I just showed you. So how did that work? Oh, it's an amazing phenomena. The moral of the story, in a downtrend, you don't buy out of the money calls. So check this out. You have been right here. You have been right for 20 points, and your calls are on the low that they've been. That is an eye-opener. And that's 8 days out. Another mistake I see is going and buying farther out because you're like, I know I'm going to be right. You're going to lose on time premium. If you want to bet on it going up when it starts turning, do it in some kind of spread where you're taking advantage of the middle strike dying. I'll give you a for instance. Let's say you were bullish for March 28th. So you see these are $1. So let's say you called right here, right when I showed it on StockTwits, the inverse head and shoulders. That would be on March 14th. That's right there. Right there. Yeah, you're even. March 14th. So let's say you saw that inverse head and shoulders. You're like, Chris says it's a Stewie pattern. Markets might be going up. You don't buy these. You go and buy the 570s. Let me just show you. You could do it as a butterfly. You buy the 570s right here at 270, and you sell the other ones. So on that day, these were 350. Just figure 350. The 580s, I'm not even showing the way out of the money, but the 580s were $1.50. So you're doing that butterfly for less than $1 because the 590s are nothing. I mean, they're nothing. So let's say you did that. You bought a 70, you sold twice as many 80s, and you bought a 90. It was about $1. Well, guess where it is now? It's out of the money still. But survey says there, 244, you doubled your money. So if you did the other one, you lost 80%. If you did this, you took advantage of the middle strike dying. That's what you're doing. So by the way, Chart Patterns Mastery, still in NVIDIA. So where's that call fly we're in? It's probably about $1.70. Now you look to take your profit. So here's another perfect example. The stock has rallied 2 points. 2 points. And then 119 calls are only up 50 cents. That's why we did it. So let's see where our butterfly is. We did it real time. The 15, 19, 23. Yeah, $1.70. You take your 50%. Just take your 50%. No, that's what I'm going to try to do. Oh, the market's selling off. KC. Like I said, I called that before it happened. So hope that helped for everyone. Called it before it happened. So that's what I was telling you, Lawrence. Showing it before it happens. If the Russell sells off, the ES is going to sell off. And chart patterns mastery, I showed you a short idea. So no, I never buy leaps either. So just keep in mind about the leaps. So if the volatility goes down, the leaps go down even more. Now, if you want to say, I want to buy, I just want to buy, I think in the long run we're going up. Well, let's see it. Let's take the SPX and we're going to, well, it's hard to go way out. But I mean, because they're so expensive, but let's do it anyway. So where's the VIX? That's your first question. The VIX is 20. Where is it historically? Historically, it's usually about 15. See the 15? So, KC, let's just show you. Let's go to last May. Right here. Right in there. It was like 15. So where was the expected move 6 months out? So just take May. And so going into this, like I said, I'm not bullish or bearish FedEx. I just wanted to play it unchanged. So no idea in FedEx. I don't bet on earnings unless I see unusual option activity, but I just don't bet on it. But getting back to it. So KC, let's go back to SPX and let's look out 6 months, even though that's probably not a leap. But let's go 6 months. So we're going to go, what is that? 180 days. 700 expected move. See that? 700. 194 days. Now go back to last year. And go to May. And go 180 days. This is a big eye opener. So remember, over 700, 400. Yeah, that's what happens if you buy a leap. You're going to get killed when the volatility is high. Whoa, look at the market go. So there you go. Lawrence called it before it happened. Oh, very exciting. So that XSP, chart patterns mastery, you're in the money now. Like I said, we did this one for like 710. So you're up probably about 10%. So NVIDIA looking to take the profit. Yeah, we're 3 points in the money. You look to take your profit. You don't want the market to overshoot on you. Oh, let's go into here. Remember, it's 2 points higher than the low, and the calls are almost on their low. It's an amazing phenomena of expiration of how things die. Yeah, even $1.63 isn't bad when the market's falling apart. So I'm trying to get out. So that's where I am right now. Everybody have a good one. Thanks so much for all your questions. Talk to you later.